All right, I'm gonna jump in. Thanks for joining. I'm gonna start with a screen share and we're gonna take a look at the same spreadsheet that I check in on about once every 2 to 4 weeks. And there we go. You'll see that. I added a column here. There over on the right. So I think this will be kind of interesting to check throughout the year. Just what a 30-year fixed mortgage rate is for a above average credit score. So that's at a 750 credit score. And obviously there's going to be some variations to that, but that's just kind of a compiled average. So I'll start over here on the left, active single family home inventory in Indianapolis. I don't know if this is what you are personally feeling and experiencing, but very clearly inventory is on its way down and activity is on its way up. So we started the year with almost 1,500 single family houses for sale every 2 weeks. That has declined. And we are now at 1,170 single family homes for sale. 225 of those listed in the last 14 days. So we do still have quite a bit of inventory that listed in December or January. However, we just passed the threshold. If you remember from these calls last year, the first half of last year, we always had more pendings than actives. And then a little bit past halfway, that started to rebalance. And then I think it was in August when we flopped, and then we had more active homes for sale than pendings. And it's been that way since then. Today was the first time that single family homes in Indianapolis are now flipped the other way. So you have under 1,200 single family homes for sale and over 1,200 pending. That trajectory suggests, particularly if we're not even into March yet, that trajectory suggests we are absolutely in for a seller's market spring. I think y'all are probably experiencing this. We have the multiple offer situations coming back. Buyers are kind of losing leverage pretty quickly. Now, just anecdotally, I haven't heard of situations where there's 30 and 40 offers. I'm not saying that doesn't exist right now. I'm saying that clearly in the spring of 21 and even in the spring of 22, there were homes that were getting 30 and 40 offers on them. I haven't heard about that, but I've definitely heard about homes getting 3, 4, 5, pretty common right now and selling very fast. And the trajectory of this would suggest that if it keeps moving this way, like it normally would through March, April, and May, we could get to a point where we were really low in inventory. But just real quick, of the homes that closed in the last 30 days, the average days on market for those was 52. And then kind of combining how many homes we have for sale and the rate of homes trading hands means we have 52 days of inventory. So again, this is something we kind of highlighted a lot last year. This column right here, if you were looking for one data point to help a buyer or a seller understand the dynamics of the market, it's this one, because it's a combination of a couple of the key data points. So this means just as recently as January 11th, activity was fairly slow. Inventory wasn't high, but activity was slow enough that it would have taken 153 days for every single family house in Indianapolis to sell at that rate. So that's a third of what it was now, because we have fewer homes for sale and more homes are selling every day. That 52 days, that's not crazy. If you remember, like we got down into the range of 10. There was even a one point in time where I think it got down to 8 early last year. So 52 days of inventory isn't crazy low, but it's more about what's clearly happening in the trajectory. Does that make sense? So it's not 52 that says oh my goodness, crazy sellers market. It's that in the last 40 days, it's gone from 153 to 82 to 67 to 52 and appears to be on its way down because there are fewer active homes for sale than pendings. Okay. I am going to pull up a graph here. I thought this was really interesting. I'm going to look at two things here, but this is an article that's kind of summarizing a report that Zillow and a report that Redfin recently put out. If you follow these things, you know that any of the really big companies in residential housing, they've had a bad last 6 months. So really from September through January, it was a bad stretch for a lot of those. You guys, a couple of you sent me these articles, the big private equity dollars that were buying up single family houses over the last 3 years. A lot of those companies are really struggling because they were super aggressive. And then any sort of slowdown in the market was difficult for them to figure out okay, what does our business model do if activity slows down? So I think it's really interesting. Zillow and Redfin, both in this article, if you want to take a look at it, their finances didn't look great relative to what they were a year ago. But the part of this article that I wanted to highlight, I just think this is such an interesting illustration of we often, I think it's a human tendency. We think that things are unlike what they have been in the past. We tend to, whatever's happening right now, we tend to overstate or overassume the degree to which it's really unique. So the last 3 years, obviously, have had some really unique things to them. But I think whatever conditions we have in a given moment, we don't tend to assume they're just like they were previously. I think we're actually looking for things to be very different, particularly in an industry where an individual realtor, like all of you, it doesn't really matter how much business you do. An individual realtor is going to experience significant pendulum swings in their business. You're going to have a really good 90 days, and then you're going to go totally dead for 60 days, and you can't make sense of it, right? So if you apply your own individual experience to the marketplace, you would assume that the marketplace is something that has this really big pendulum swing. And generally speaking, it doesn't. And I thought this graph was super interesting. So what we're looking at here is the number of single family homes for sale across the United States. And this is 2020, 2021, 2022. You can barely see 2018 and 2019. There are these lighter lines down here. And then they've started to chart 2023. And what I think is so interesting about this is look how consistent the patterns are year to year. Now, this is across the United States. Any one marketplace is going to experience more up and down. And then from year to year, it might have some variables that, change it. But generally speaking, there is this very consistent increase in the number of homes on the market from January through the middle of summer. I think this is super fascinating that almost every year there are these quick drops. I would read this as something like at the end of school, at the end of the school year, there's this flurry of buying activity that lowers the number of homes for sale, and then it jumps back up. And then that happens again, right before school starts. You notice those two dips down that happen almost every year. But I think what's super interesting is this, it's very consistent that right now, the point of time in the year that we're in right now is where inventory nationally tends to be doing what? going up, right? The low point comes as you go from December to January. And then in January, every single year nationally, there's some sort of trend up, different rates of increase, but some sort of trend up. Does that strike you as interesting in comparison to this? So if nationally, 5 years in a row, and by the way, if you look further back, the same thing is true. This is a time of year where not only are we seeing a lot of listings come onto the market, we're actually seeing the number of active listings increase nationally. That's the norm. Well, I look at that graph and I look at what's happening for example, single family homes in Indy. And I say, it looks to me that we will continue to separate from the national housing market to the favor of sellers and to the stress of buyers. Okay, so I'm going to say that another way. For the 5th year in a row, in the United States, the number of homes for sale has been higher at the end of February than it was at the beginning of January. That 60-day period of time has seen an increase in the number of homes available nationwide 5 years in a row. In Indianapolis, from the start of January to the end of February, we actually saw a significant decline in the number of homes available for sale in that period of time. Now, doesn't predict the future, but I do think it's another data point that particularly for that first-time buyer. I know we talk a lot about this, but you know, it's not our job to convince somebody of what to do. But if I'm in a situation where a first-time buyer is seeking advice, or perhaps being told, you know, by some sort of outside voice that they're going to sit and wait, you don't tell them what to do, but I think this is really valuable information to share with them. I'm going to share one more thing. I thought this was a really interesting article. This is from about 3 weeks ago. It's in the chat there. We'll send it out later. It's essentially, this article is trying to evaluate all of the major metropolitan markets in the country in terms of, so like it starts out with the premise that a couple years ago, the 100 largest marketplaces in the country, they were all seller-friendly markets. I don't think that comes as a surprise to anybody, right? Like, we all know inventory was low everywhere. Interest rates were super low. Buyers were going crazy. The top 100, they were all sellers markets. What this article has attempted to measure is what's happened since then. So like, which markets have maintained that amount of leverage for the seller, which markets have balanced out and are still kind of sellers markets, but not like they were. And then are there some markets that have actually kind of swung, even potentially becoming buyers markets? And it's all relative, right? You have to define what's a seller's market, what's a buyer's market. I think it's really interesting comparison between those metropolitan markets. So it kind of rates like, what are the 10, and then later it does 15 strongest sellers markets versus strongest buyers markets. And in this particular analysis, Indianapolis isn't much of an outlier. It kind of fits the norm of what's happening. So it's not an outlier to the benefit of the seller or the buyer in this analysis. But it does down here at the very bottom. So it takes the 100 biggest markets, and then it rates them from a year ago to right now to like what's their forecast for like 12 months from now. And it's trying to assign this like really simple Does it strongly favor seller? Does it favor the seller? Does it favor the buyer? Or does it strongly favor the buyer? I don't believe there is a single market where they would say today or a year from now, there's a strong buyer's market. There are some that they're suggesting 12 months from now, they think it will be favoring to buyers, which I think is interesting. They actually even say in this particular analysis, they think a year from now, the market would be a buyer market nationally. That's what's up here at the very top. So if you scroll down to Indianapolis, it always makes me laugh that Anderson always gets a mention in these, how Anderson got the mention there rather than any other town, and it always does. But the Indianapolis Carmel Anderson market 12 months ago strongly favored sellers, today favors sellers, and they're saying 12 months from now will be neutral. We'll see. I tend to disagree with this, but I think when you take this in the larger scope of the article, what it's saying is we think 12 months from now, the market will actually be buyer friendly, but that Indianapolis would be neutral. So more seller friendly than the average. I think my view of the analysis would actually, or my view of the data would be different than this article's. Like, I think my prediction is not in line with this article, but I did think it was a really interesting way to look at what's happening. Okay, a lot of information. We're coming up on 9:20. Here's my guess. I think active realtors in the greater Indianapolis area intuitively know that if we're not already back into a seller's market, we're clearly headed that way, because you can tell the number of showings that are happening, the competition on a good listing. Y'all are having multiple offer situations. I think just intuitively, anecdotally, we know that's happening, but let me assure you, the data backs that up. The number of listings that we have right now, I'm actually really interested to see what happens with interest rates, because, you know, I've been told by several people that they think interest rates are going to come down before the end of the year, that like at some point we'll see a lower interest rate climate. Going back to that spreadsheet that we look at in terms of the number of homes that are for sale right now, if we saw a significant decline in interest rates, I'd be concerned that we're kind of right back to where we were a year ago or 2 years ago. Just a flurry of activity where it's very difficult to buy a house. So I don't know what's going to happen with rates. If we see inventory stay really low, my guess is rates won't move. They'll stay roughly where they are, somewhere in the 6s, to try to maintain that balance. Like it's basically worked. We'll see. If you start to see rates go down, it's kind of this hard to understand. It's like counterintuitive. You might have a buyer that is celebrating because they see rates go down to, I don't know, let's say they ended up going into the high 4s. I don't think that'll happen, but you might have a buyer that's sitting there thinking like, oh, I really want rates to go to 4.9. That really helped me in terms of affordability. I understand that. But the last couple of years tell us that actually, I'm not sure that's good news for the buyer. Because if rates go below 5, I think they will lose the remaining leverage that they have in negotiations. And we're going to be back into this situation where they're competing against 10 people every time they look at a house. They're having to go way over list. They can't get an inspection. They might be saving $60 to $100 a month on their mortgage payment. But they've had to sacrifice massively to get the house. And so I actually think right now, with rates in the 6s, is a better time for that buyer to enter the marketplace before inventory gets a lot lower. And then if rates were to go into the 4s, buyers aren't going to be able to like play this timing, but y'all follow me on that. that if rates were to go down a year from now, a buyer's best play would be to buy a house right now while there's some equilibrium between buyer and seller, and then just refi the house a year from now. They bought the house in the 6s, maybe rates go down, they can refi, and they can get to that interest rate without having to buy the house in the middle of that fury where they don't have much leverage. So all in all, I think this looks good. Transaction count is on its way up. I am fascinated to see what's going to happen with the number of listings over the next month or so. So I'll be watching it pretty regularly. We'll jump on 2 weeks from today. We'll look at that again. As always, if I can be helpful in any conversation that you're having, helping a particular client analyze or make a decision, always feel free. Shoot me a text, give me a call. Happy to talk through this. Thanks for joining. We'll send out the video and these articles here later today. Y'all have a good Wednesday.